Good day, YouTube. This is Jay Money with Falling Forward Financial. Just come across this article here. 3 dividend growth stocks to buy in July. Been doing a couple of these videos. Thought they were pretty interesting just to throw some dividend stocks out there, since a lot of the market is down, and just kind of trying to find more conservative and some other things to pursue and try to make money and diversify here on the channel. So just kind of throwing these out there. But this is 3 dividend growth stocks to buy in July. We have Abbott Labs. I've talked about all these a time or two here on the channel, so they're a great dividend king. You can go ahead and buy the dip, but I don't give tax, legal, or trading advice, so just state my opinion, and you can go make up your own opinion what you want to do with the stocks here in the article. At ABBV, I do own some. ABBV owns a juicy dividend yield, great long-term growth prospects, and then Johnson & Johnson has increased its dividend for 60 straight years, with its business poised for strong growth ahead. So, but it's kind of interesting. These 3 stocks do have a lot in common. So, but again, they're dividend growth stocks that are great picks to buy here in July. So we have Abbott, ABT, ABBV, ABBV, and Johnson & Johnson, J&J. So dividend king, give you something to laugh at here, to buy on the dip. So if you're looking for a dividend growth stock to buy and hold, you shouldn't overlook the company's track record. With Abbott, the company has been paying dividends for nearly a century, with its initial payment going back to 1924. And for the past 50 years, it is also consistently increasing its dividends, so which is kind of amazing. So if you'd had the stock back then and just kept collecting the dividends, or it would probably have a pass it on from a grandpa or something like that, that would be kind of interesting. So it's increased its dividends, making it a dividend king. Abbott's dividend yield at 1.8% is a little higher than the S&P 500 average, but investors could easily be collecting more than their initial investment by just buying and holding the stock. 5 years, Abbott has increased its dividend payments by 77%, averaging a compound annual growth rate of 12%. So a little bit slower than some other growth stocks out there, but it's still got a pretty good yield, and probably safer than some other stocks out there. But recent rate hike of 4.4% bump. The company were to continue to grow its dividend at that rate, it would take approximately 16 years for the stock's payouts to double. Abbott has plenty of room to continue growing its dividend. In each of the past 4 years, its free cash flow has been $4.5 billion or higher. Its annual dividend payments currently cost Abbott $3.2 billion. So, company generates revenue from 4 segments: diagnostics, medical service, pharmaceuticals, and nutrition. All of those business units delivered growth of at least 8% last year. The diversification makes Abbott a resilient business to invest in. Here you can kind of see their chart, 102, 103, on up to about the almost 110, 109.50. So it's just been kind of up and down. Currently at 108.23, $192 billion market cap. There's the days range, so right at a $2 swing, so you could even trade this one. 52-week range of 101.24 to 142.60, so about a $41 appreciation. Volume of 7.3, average of 5 million. But Abbott shares are down 22% this year, so you can look at that as buying the dip. But again, I don't give tax, legal, or trading advice. Next we have ABBV. I agree with David's optimism about Abbott. My pick sort of keeps in the family. ABBV was part of the Abbott until 2013, so kind of interesting. One was part of the other, and they're both here in the article. So Abbott and ABBV have been neck and neck boosting their dividends since the spinoff. However, ABBV holds a small percentage with a cumulative 252% dividend increase during that period, but its dividend yield of more than 3.7 is a lot juicier than Abbott's yield. So it was the top 3 best dividend aristocrats, S&P 500 members with at least 25 consecutive years of dividend increases in the first half of 2022. Here you can kind of see what they've done. So about the 143.50 to 144 on up to the 154 there in probably about a week. So it's just been kind of up and down, but it's still kind of holding. Currently at 147.69 with a $265 billion market cap. Days range of 147.34 to 150, so about a $3 swing in there. And the 52-week gained about $70 per share, so not too bad at all on this one. Volume of 5.3, average of 6.2. So like I said, I have some ABBV. I'd like to get more. I'm hoping it stays down or goes down more and be buying the dip on this one. So ABBV faces the loss of U.S. exclusivity for Humira next year. That's especially problematic because Humira is the company's top-selling drug right now. So, however, ABBV has long planned for the scenario. So, the stock trades at less than 11 times expected earnings despite its big gains this year. ABBV still looks like a dividend growth stock that can make investors richer over the next decade and beyond. So, and there's no ceiling for sight in this dividend. Next is J&J. Dividends are great. Who doesn't enjoy getting some passive income? That's what it's all about. So set it up on drip and keep buying shares whenever you can and just let it build and snowball, and there you go. So then you can retire. Healthcare giant has raised its payouts by nearly 35% over the past 5 years. Zooming out helps give even more perspective. Johnson & Johnson is a member of the very exclusive group of Dividend Kings. It has increased its payout for 60 consecutive years. J&J's business is rock solid, multiple blockbuster products, solid pipeline, strong balance sheet, several potential long-term tailwinds are some reasons why the drug maker could be an excellent long-term play. Here's a look at their chart, kind of the 173 on up to 182, and it's actually down a little bit, so currently at $170.71, $452 billion market cap, days range of 169 to 172, so almost a $3 swing in there. 52-week range is about $31 appreciation. Volume of 7.4, average of 7.1, so it pretty much stays right at the same volume. But they are going to spin off a consumer health unit next year. 2 remaining segments, which generate stronger sales growth, are capable of helping it deliver robust financial results regularly. So they're always doing spin-offs, growing, just coming out with tons of products. So 3 stable companies, J&J, Abbott, and ABBV. If you have any of these, go ahead and list that in the comments. If you have all 3, that would be awesome. And if you have any other dividend kings out there that you like better than these 3, you can list that in the comments as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.